Guys, welcome to the Independent Investor Channel. We're here September 14th in the evening time, 9 o'clock Eastern Standard Time. I think a lot of what we've looked to achieve on the Independent Investor Channel over the last couple of years is to identify a drastic difference between what it takes to become a successful investor in the stock market and to challenge some of the traditional methods of investing, of just putting your money away, forgetting about it, which does have some inherent benefits to it. But I do like the group dynamic that social media does provide. I love the fact that no one person that can come on YouTube and discuss stocks or the stock market or budgeting or finances has all the right answers. And I'm amazed more often than not when I overlook the Facebook group that I've got through the Independent Investor Channel, and I'm amazed at some of the differing opinions. And I am a sole believer in the fact that collectively we can come to a greater outcome than any individual could. And that's one of my criteria when I'm looking to vet information, is how open somebody is to new ideas, okay? Or there's been certain channels out there that I've dropped comments on and didn't even get an acknowledgement, okay? You guys see how engaging I am before these live feeds. I'm available, I'm here. I've made a cup of tea for you guys to come on and engage a little bit. One of the sheer reasons why I do this channel is to engage with people, okay? I need to understand what it is that you need. And my approach to this is to try to understand what information a new investor may need from some more experienced investors and also some opinions from some beginning investors, because collectively we're all really looking to grow and accumulate wealth together, all right? And I love the word build wealth together, because in essence, that is what you are doing, all right? The hardest thing that you can possibly do in the stock market is validate why you are an investor when you start investing, okay? I often say that the first $10,000 will be the most difficult milestone that you make as a beginning investor. So if you are out there and you have less than $10,000 exposed to the stock market, this is where you can find some of those validations from some folks who have taken some severe red days in the stock market, who have invested in stock and taken them into a downturn, only to wait it out and see it come back into the black. You're going to understand a lot of people who have held stock for multiple years, okay? And you're going to benefit from the perspectives of those individuals, because you don't have those validations when you are a beginning investor. And honestly, the ironic part about being an investor when you start is that's probably the time when you need those validations the most. It really is. That's the ironic part about it. If I go into a supermarket and I buy something and I don't get credit for my 20% off, I'm upset, okay? But you guys have to understand that that 20% that I'm thinking about on a purchase has nothing to do with my mindset on how I approach the stock market, all right? When I see a down day and I'm down a few $100s, or if I'm down a few $1,000s, I've been through so many of them, it means nothing to me now, nothing, all right? What we're gonna kind of talk about in tonight's dialogue, I really have a full lineup of fundamental investing basics. We're gonna engage again with the group. I've got a pretty good group kicking in here. This was close to being canceled this week, as you well know. We kind of dodged a little bit of a storm track here in Virginia, so I was able to provide this opportunity to come and speak this evening, September 14th, 2018. I'm glad to have everybody in the group. I see some plank owners of the group. I've got Nyella on the line. I do have my first question of the night pop in here regarding Facebook and whether or not one should take a position in Facebook. Not only that, I had one of my administrators in my Facebook group post a Goldman Sachs article that was very, very good. It was very, very well written, discussing some of the potential tailwinds and a potential recession as early as 2019, okay? Not necessarily a recession by technical definition, yes, but more of a correction back as high as 20%. With regard to max earnings. But first, I will address the Facebook question. It was posed to me, should I buy Facebook right here? It really just depends on your situation, okay? If I was a young investor and I was out there looking to get started and I had a few $1,000s to start in the stock market, I would really look over the landscape of an S&P 500 ETF, okay, and get that thing started in a self-directed Roth IRA account. And I've got some young folks in the group that are just starting out and they're getting this information. They can get it prior to 18, but if you've got earned income and you have the ability to start a Roth IRA and you've got the ability to fund that in some capacity, you are ahead of the game. You really are. And I will be the first to congratulate you when you come into the Independent Investor channel and get this information. I do not apologize. I congratulate, okay? Because this is the information that I wish I would have had when I started, okay? Now, as a starting investor, do you need to be putting $2,000 or $5,000 into Facebook? No. Is it a buy right here? Probably, okay? But it's all relative to the size of your portfolio and whether or not a technology holding that is transitioning from a growth stock to a value stock fits in your specific portfolio, all right? If you're looking to add a little bit more exposure to a larger portfolio and you have less than 20% exposure to the technology sector, go ahead and add Facebook to the portfolio. I am a long-term holder of Facebook. I did take a liquidated position down to 30 shares in Facebook. That's what my current position is. I did sell it when it was north of 200. I made the right move, but I'm actually looking to buy more, but I'm exercising my right to hold, all right? And that is sometimes an underutilized approach in stocks, in that a lot of people either want to buy or they want to sell, and they forget that the option to hold is more often than not the prudent option when making your stock decisions, all right? Now, my opinion with regard to the article that was posted in the group about the recession, I don't know. I offered that from a twofold perspective, all right? Goldman Sachs, one of the most respected, holdings brokerage houses out there, one of the most respected financial companies out there. I did enjoy the article. If you are not part of the Facebook group, one of my administrators, Alex Pitty, is really on top of posting a lot of that credible information. And that's just one of the holistic perspectives that we take in taking a collection of opinions from a lot of different people. And I know Alex is really into that technical stuff. He puts a lot of charting and technical analysis and a lot of excellent articles. And that's why I've allowed him to work in the capacity of an administrator within the group, just one of few that I've got in the group that represents what I feel the spirit of the group is. So I really hope that answers your question. I do hold Facebook. I believe it's one of the, it is the top social media play. Okay. I do own Google as well. I think Twitter is kind of a distant third. But when you're talking about the social media landscape and ad revenue, Facebook really does get it done. And I think just like anything, a lot of what Facebook is going through right now typically gets overblown in any condition, and therefore the stock does suffer. But this is the time you want to be looking at some of these names. And if you were already looking at Facebook before to take a position in, take a small position. $800 buys you 5 shares of a position. That's a pretty good position to take. I would recommend that you have some tough, thick skin, all right? Because again, a lot of the validation on the Independent Investor channel, and the reason why I'm so engaging with my audience, is I want you to understand why it is you do what it is you do. It cannot be because Ryan from the Independent Investor channel told you, or Ryan Scribner from the Ryan Scribner channel on YouTube told you, or Jeremy from the Financial Education told you to do something, and you have no idea why it is that you're making those specific moves. Shame on you if that's what you're looking for. Now, Each of those platforms deliver different information, okay? But the trick is to really take the information that is appropriate for you and deploy what it is you can resonate with to embed or to empower your financial lives as we look to build wealth together. But I need each and every one of you to understand why it is you're making the moves that you're making in the stock market. I've always said, if you're going to invest in the stock market, invest all the way, okay, or don't invest at all right? Don't be in the middle, all right? Being in the middle and being wavering with your decisions is you're gonna end up disappointed, and your money is gonna end up controlling you rather than you controlling your money. Very, very important, all right? Take away from a fundamental perspective of approaching the stock market, all right? I believe that we're delivering a little bit different approach to stocks. I do advocate for a lot of cash on the side. You guys know a couple weeks ago, I started opening up the defensive positioning dialogue with you guys. I do think if you guys have just recently got started in the stock market, I'm going to say something a little bit scary right now, but you guys with less than $10,000 in the stock market, don't do anything, all right? The fundamental lessons to testing yourself and testing your perseverance and your mental fortitude in the stock market will be so much more beneficial than you trying to pull out a few $1,000s and trying to time an eventual downturn and a re-entry into the stock market, all right? It's not something that we advocate for, and it is not something that I recommend you do, all right? There are inherent lessons to becoming an investor and staying along the course and staying with your plan, all right? I'd like to welcome everybody into the group. Thank you so much for coming in. I hope that it answers your first question. I got a second question here that I would like to address as well. The question is, I've got 14 stocks in my Roth IRA. What is an appropriate allocation for those stocks? I don't want to invest in ETFs. I'm going to say this openly, and again, I'm trying to fine tune my message in that you guys understand specifically where I'm coming from. I think ETFs is a great way when I'm talking to the masses who have no experience in the stock market and is looking for a low-cost, diversified entry into the stock market on your march to the first $10,000, all right? Make no mistake, I'm setting that goal for you, all right? If you've never thought about that before, or you're sitting there and you're a new investor and you think as an 18-year-old or a 20-year-old that $10,000 is an insurmountable mark, I'm here to tell you that you need to get over those mental barriers, all right? You need to set that goal and you need to get there as soon as you can, all right? You have 14 diversified stocks right now. I can tell you right now, I don't care how many single stocks you own in a portfolio, you are not seeking or realizing diversification. However, I am a huge advocate, if you are young, to investing in single stock as long as they are of the caliber and quality that I recommend, okay? I don't want you to be entering into your entire portfolio is filled with Snapchat and Roku and a few pot stocks, okay? I want you to build your portfolio based on sound principles, all right? Now, what you lack in diversification, you are gonna make up with the benefits of higher than average appreciation potential with single stock allocation. You're going to get to enter those stocks and they're not going to cost anything. They don't cost you any cost of ownership aside from most typically an entry fee to buy the stocks, depending on what type of incentives you have inside your retirement account, all right? Finally, you're going to get to benefit from setting some of those good dividend paying stocks up on a drip program, again, free of charge. And I want to make this very clear to the new audience that makes their way into the Independent Investor channel. I cannot stress enough. It doesn't do us any good to talk till we're blue in the face and you come here and expect me to give you a bunch of magic stock picks over here without acknowledging the importance of the account over here. And this account acknowledgement is missed on YouTube all the time. Very few channels out there actually acknowledge the importance of the style and the designation of the account that you have. And that can make more of a difference than the actual infinite number of ways that you can calibrate your holdings inside of that portfolio. All right. Now you can hold an infinite amount of holdings or assets or equities within an account. All right. But if it's not designated as the right account, the self-directed account, all right, it's going to perform differently. And I want to stress that. Anybody who's tuning into the channel for the first time this evening, I really want to perk up your curiosity. And if I've poked you in the side a little bit and got your attention, good. We're doing exactly what we're trying to do, because this method of approaching the stock market does not require you to be 100% invested. It doesn't, all right? It allows you to strategically pick the right account, pick the right assets, put them together, and you're a winner. All right, you're a winner automatically because your plan is set up for success, not failure like most people. All right, I'm going to kind of allow the group to get in here. We have a nice, robust group tonight. I'm fired up to kind of conduct the discussion about this week in the stock market. I do want folks' thoughts on Roku as well. I'm a proud owner now of Roku, not the stock, but the product. But I think it's really awesome. I think it's actually better than Apple TV, and I'm enjoying the service. I wish I would have bought the stock at $25. That would have been a tripler. So anybody have any thoughts or any good buys or any stock recommendations, please throw that in the group as well. We do this as a community discussion, and I insist on engagement as well with the group. So I'm going to scroll through some of these questions and see if we can't get some of these questions answered tonight. Again, welcome to the channel. Another wild week, added Boeing to the Roth this week. Been on my radar for a long time. I've got AVA offering what I consider the premier commercial airline production company. I saw some reports this week on Boeing that was absolutely intriguing. I don't own Boeing currently. I did take a larger position in United Technologies. I do like Honeywell as well. Both of those companies are into making some of the engines that go on some of those aircraft, but Boeing is best in breed. Certainly you're going to enjoy owning that stock. Congratulations, become an investor in that company. And that really reminds me, when you guys are looking to get started in the stock market for the first time, I really want you to sit back for a second and look at a company from a distance and say, do I want to invest in that company? Okay. Whether it be a Home Depot or an Amazon, perhaps maybe you enjoy the products. Perhaps maybe your cell phone coverage is offered by Verizon. All right. And you resonate with those companies. All right. That can kind of be your entry. All right. On the flip side of that, if there's businesses out there that you don't agree with or have some problems with, that might be a reason for you not to look any further about investing in the company. Because when I talked about the difference between a beginning investor and an advanced investor, those beginning investors really need to connect with the stocks that they're investing in. And I really think that has a fundamental benefit or a psychological benefit when you're looking to hold into a downturn. All right, that can really help you a lot. Okay. When you are a beginning investor, it takes a lot more capital up front to continually fund this. I know the dollar cost average probably becomes one of the most important things, and you'll probably look at your portfolio at the end of the year and you're probably only up a few $100s. Okay. If you're up 10% and you're up $1,000, you're like, wow, I put $10,000 of risk only to be up 10%. I'm up $800 or $1,000 in the account. This isn't good enough. Why am I doing this? And these are some of the justifications that you miss out on, right, en route to a much larger financial picture when your portfolio actually starts to become self-funding. All right. And these small stocks, like one of my viewers said that they've got 14 stocks in their self-directed Roth IRA account. Think of those 14 stocks as little money machines. All right, they're little money machines in each and every one of them. And those value stocks are not going to jump up and down every single day. Okay, they're not. They're not going to make you wealthy overnight. So make sure you have realistic expectations. what's going to happen over the course of a few years is you're going to notice that you've been paid quarterly dividends, sometimes unknowingly. All right, they'll just show up in there. And if you have the dividend reinvestment program set up, it's going to buy you partial shares of each and every one of those money machines. All right. And the validation that you get as you become a little bit more advanced investor and you've built up those positions via funding, via dollar cost averaging, maybe you've built some cash up over here, maybe you get an injection of that tax return over here as well. Guys, a lot of you guys know, and I'm very open with this, I've taken my tax return over the last 12 years and invested that money in the stock market, all right? If you get a little bit of tax return, instead of going out and buying the newest 1080i TV at Walmart, try to think of paying yourself first and maybe funding some of your Roth accounts with some of those injections of cash that are almost inevitable in life as you live life, but you got to provide yourself that avenue to do just that. So really, really important when you need to kind of understand. And if you're hearing me out and it takes a little bit of trust to say, you know what, Ryan's saying that I need to have more fortitude. It's more important when I start out as an investor than it will ever be later on in life. Right now, I'm rock solid. Rock solid. All right. And I'm no different than anybody else. It's just that my psychology about the stock market is built upon 25 years of experience, as opposed to some of the folks that are being referred to the independent investor channel and are fairly new to investing and are looking to seek out those validations. All right. We're looking to provide those to you somewhat manufactured based on experience. Okay. But it's not going to impact you as much as when you start to live through some of these eventual things that the stock market can throw at you. All right. I highly recommend that you respect anything that the stock market can potentially throw at you. Expect it. All right. Expect the unexpected in the stock market, and you'll never, ever be surprised. Never. All right. Don't ever be complacent on the stock market. Don't ever think that you can just throw money at it and make money, all right? Because eventually we will end up having a downturn, and I don't mind putting that dialogue out there now. Why? Because new investors can benefit from having that discussion now, all right? Again, welcome to everybody in the group. Thank you for that question. That was a really, really good question. I'm going to scroll down here. I've got Mario Saros from Scotland as well. That's awesome. Really good to see you. Greenhorn here, champ. That's awesome. I love it. Greenhorn Grill and Smoker. I love it. What's your favorite dividend aristocrats? Wow. That's a pretty awesome question. As a matter of fact, I might offer up some of my favorite dividend aristocrats right now. I just ended up, I don't want to get into details about the newest project that I just did for someone specifically, but I will offer some of the holdings based on a lot of research that I did. And I'll just run down the ticker symbols right now based on the 16 dividend aristocrats that I offered for that particular stock portfolio. And these are the actual holdings that I recommended for this particular individual. So here we go. All right. Cisco, I've got Intel. Yeah, I know. I'll take the abuse. That's fine. But Intel is going to be on that list. Everybody just forgot the good quarter they just reported. Citigroup in the financials. I've got BlackRock right behind it. All right. Very expensive stock on a relative basis, not so much, but a lot of people get turned off on looking at a Google or a BlackRock. I just bought Bookings Holdings this week as well. And that share price was around $1,900 a share. I ended up buying 5 shares of the stock. Cost me 10 grand. So had a great day today, went up $40 a share. So pretty good entry on Booking. I actually bought Expedia as well. So I added both of those because I love Trivago. I love that. I wanted a small niche in the travel piece of the business. So you guys can kind of see, I don't typically buy airlines, okay? And I don't typically buy auto stocks. I don't typically buy casino stocks. All right. But you'll see me dabble in certain subsectors that are really exciting to me. Right, wrong, or indifferent. I added some holding in booking.com this week and Expedia, just for your guys' awareness. Okay. 5 shares of Booking, and I believe I added maybe 50 shares, I think, of Expedia. So just for your guys' knowledge, just along those lines. AT&T, as you guys know, in the low 30s. I've got Coca-Cola Classic. I've got McDonald's. I've got Walmart, 3M. I've got Dow DuPont, Royal Dutch Shell, Microsoft, Blackstone Group, Verizon, Merck, and Pfizer. I just threw 16 at you rapid fire, all right? And what's amazing to me is when I tune into other YouTube channels, what's amazing to me is it's as if they talk about the same tired 5 stocks over and over and over and over again. All right. That's why I talk so much about the infinite amount of combinations that you can make on the portfolio building side. And so many people are missing. Just take it and put it into a brokerage account. All right. It's such terrible information for a new investor. It's freaking terrible. All right. It is terrible. What you need to hear is you need to start with a retirement account first. All right. I'm going to dispel a notion that came through the subscriber base just today with regard to your freedom and flexibility to add ETFs. Let's say a Vanguard ETF to any brokerage account out there. You do not have to have a Vanguard account to buy a Vanguard ETF. You can buy it in any brokerage account. Okay. So it's very, very important that you understand that we open up the holistic dialogue on some of the value companies that are out there, because value has been kind of overlooked. You look at some of these names on this list, they're really good dividend payers, and you can get them at a fairly reduced price right now, some very attractive multiples on some of these stocks. All right. The other stocks I will offer as well, in addition to those 16 stocks that you can kind of own forever. And I separated this because they have the growth caveat along with the value, in my opinion. All right. So starting with Apple, Johnson & Johnson, JP Morgan Chase, Disney, Pepsi, Mondelez, United Technologies, and Google. All right. Those are the ones, those can be core cornerstones, as any of the dividend aristocrats can be as well. But I look at them a little bit different, and these are going to be a little more established. These are the ones that you want to make sure and set up on the drip. These are the ones that are going to be a little bit more aggressive on their price movement. Okay. And you can expect maybe some more capital appreciation over here. So they may not all fit in the same portfolio, okay? But what we talk about on the Independent Investor channel isn't to waste your freaking time, all right? I've just offered you 25 stocks that really, housed in the correct account, you may have not had this information before you tuned into my message in understanding what a self-directed Roth IRA account is. And if you don't know, please do your diligence in trying to understand how much emphasis that I put on that side of the portfolio before we start trying to house and build a portfolio over here within that account, all right? So those are some dividend aristocrats, and that was a cool question. I gave you 25, so congratulations. Those are all stocks that everybody's heard of. Hopefully, if you're new as an investor, those are names that we offer all the time, because we like to open up the dialogue on some of the big established companies. And I tend not to try to get the next best thing, okay? I try not to invest in the next story, okay? Anytime I've ever tried to do that, I typically get burned in the stock market, and I usually end up defaulting to what it is that freaking works and has been proven to work over time, all right? Some of the time-tested, proven strategies in the stock market with regard to dollar cost averaging and with regard to dividend reinvestment programs, investing in a sound retirement account, all right, saving a cash a buffer for yourself, setting a good budget. Those fundamental premises are something that we advocate and we revolve around all the time when we're talking to new investors. And it's stuff that the quicker you can learn and understand and not be strayed away from, because there's so many people out there that want to fight why diversification is so important, why investing in a single stock is not correct, or it's so scary, or investing in an ETF isn't the correct way to go about it, that somehow, some way, somebody has a better way of approaching the stock market. It's all distraction, all right? It's all distraction. At the end of the day, if it makes sense to you based on fundamental premises that have worked historically, you're winning the game, all right? Do not allow yourself to get distracted by the noise, all right? All right. I've got Nyella, who doesn't have a question, but just says, hello, Ryan. Very cool. Nice to see you. It's awesome. I hope you don't mind that I made you an administrator of the group. You've been a longstanding supporter of the company. So use that platform to your benefit. I think you threw a really cool post up there from your affiliation. I really appreciate that. Have at it. Use it as you will. You're a plank owner in the group, certainly. So recommend whoever you need to come into the group and take advantage. There's a lot of really good information going through that group right now. And K97 is offering Boson. They provide services to American companies trying to get into China, like Nike, NBA, etc. Huge clients. The ticker is BZUN. So K97 always comes to the table with offering some helpful stock picks. You guys need to kind of, once you get these accounts started for yourself, so you do have those drop points, okay? It's amazing to me how many people get excited about investing only to never go forward and start the account, okay? Starting the account costs you zero. It costs you zero money. It's just the initial time investment to get the forms emailed back to these folks and get that started, all right? And as these stock picks start to come in, you don't have to memorize any of them. You want to use the functionality within your brokerage platforms to build out your watch lists. And what's going to happen is you're going to become more informed on the offerings out there, okay? So when I throw a ticker symbol out there of WMT, you're going to know exactly what I'm talking about, or an AAPL, okay, or a PG. You're going to know exactly what we're talking about. And it's just a different language, okay? And it's a different thought process, all right? So any new investor out there that's listening to this message, do not try to deploy what you think you know about money to a new strategy, okay? Be open-minded in evolving your psychology about what you need to know, all right, as opposed to what you think you need to know to validate why it is you're investing, okay? Be open-minded. Allow those evolution to come within time, all right, as you get a little bit more experience and a little bit more seasoned as an investor, as you work through some of these kinks and quirks and potential mistakes that you'll make along the way, all right? Do not get discouraged, all right? It'll only make you tougher as you start to work through some of those things. I've got Jared Odell in the line. Good evening, Ryan. I hope all is well on the East Coast. Yeah, it's well. This storm came in and did kind of a 180 right around where I live. So thank you for that. I appreciate that. We just kind of got lucky. I mean, we were ready to go. So that's actually why I'm allowed to come on and do this live feed this evening for you guys. And try to address any questions that I've got. I've got Ernest in the group here. Hello. I can't thank you enough, Ernest. When I go off of the Facebook group and I don't get back to certain responses, you're always quick to go on there and help address some of those legitimate questions that we got come in the group for some of our newer members that are coming in here looking to get some portfolio building advice. And when we're looking to build portfolios for the new investors, it's actually quite simple, okay? Contrary to what everybody else out there would have you believe, and that you can't be an investor, I'm here to tell you that none of that exists in reality, none of it. It's all the mental barriers that they want to put out to you through the news media and through everybody else that you may talk to, and that you can't do it on your own. And that is absolutely a falsehood and a misnomer in the financial industry, that you can't just take and put your money to work and be the sole beneficiary of the appreciation of the money. And we'll show you how to do it on the Independent Investor channel. It's actually quite simple, and it's actually quite enjoyable, to be honest with you, to do things right. All right. Any thoughts on Newell Brands and GameStop at these prices? I'm a big fan of Newell Brands. I love Unilever, Newell Brands. Of course, Procter and Gamble is in that as well. Newell Brands took a huge haircut last year, huge. I couldn't believe it. And I exercised the right not to buy. I felt like took such a haircut. It was almost like catching a falling knife. But I think it's a well-run company. I think it's a diversified brand play. I mean, these guys hold some of the most identifiable brands out there. Rawlings glove, some baseball gear, things like that. What's coming to my mind. I've looked at their portfolio of holdings, and it's quite impressive. I like Newell Brands. GameStop, I don't invest in video game stocks. You guys know I have a small position. Actually, now it's a fairly sizable position in NVIDIA, which makes a lot of the gaming chips as well. But I've never owned GameStop, so I would not want to comment on that particular holding. If there's some gamers in here or anybody that can kind of tell me, I couldn't tell you the first thing about GameStop, whether or not it was a good stock to own. It's not really in line with me as a value investor. But if you guys have opinions on GameStop, certainly open up the dialogue in the community, and that'll help. But I'm a big fan of Newell Brands. I do own Procter and Gamble. I don't own Newell Brands right here. I just don't have a lot of room right now for discretionary or staples in my portfolio. I'm actually slightly overweight discretionary right now. So just kind of keep that in mind. But hope that answers your question. Thank you for bringing that up. That's awesome. Picked up some Exxon, 120 shares for the long haul. Thoughts? I'm addressing Sash, who throws that question into the group. I've been a long holder of Exxon and Chevron, two of the biggest. I did just add, I also own a big sizable position in Royal Dutch Shell Class A shares, which if you guys heard, my Dividend Aristocrats, that was one of them. You're looking at piling in a 6% dividend. Exxon, I'm happy to own the stock. I'm currently in the red in Exxon, and I've been in the red for most of my ownership. I've been accumulating shares in Exxon via dividend reinvestment. It's a company that I've always wanted to own. I had a little bit of insight on Exxon with regard to some long-term projects that they were putting out there, and it excited me, and I wanted to pull the trigger. I think I put Exxon into the portfolio sometime late last year, and I've owned it ever since. I believe I've got a 50-share position. So you've got a fairly sizable position. It's going to pay you a fat dividend. It could just as well be on a dividend aristocrat list as well, along with Chevron, ticker symbol CVX. But those three major oil companies, I think I would endorse them. I tend to recommend keeping your oil exposure a little bit under control. I'd like to see you around 9 to 10% in your portfolio. So just be kind of careful with your oil exposure. I wanted to get exposed. There was a fourth oil holding that I added to the portfolio just this week, and that is in the form of ticker symbol PXD, and it's Pioneer Resources. And that is the fourth oil holding that I do hold right now. I looked very hard at both Halliburton and Schlumberger, which I think you could probably win with. I think Halliburton is probably a steal right here. It's not going to stay here for very long. I don't know what the problem is with Schlumberger, but those are two of the best in the business. I think Halliburton is probably a better buy than Schlumberger at this point, but those could be an alternative play as well. I love investing in oil. Where I won't invest in an airline, I actually like investing in oil. I can't tell you why. I just do. Right now, I just told you I added my fourth oil position through PXD. So I think you'll do fine with that. Kind of one of the old cliches when talking about Exxon is that you can invest in it. It's not going to make you a pile of money. It's probably not going to lose you a pile of money either. It's kind of a turtle investment that's going to pay you a fat dividend, and you'll probably get a few bits of appreciation over the years in it. So I advocate the move. I think it's good to get you your oil exposure. Right below, I've got Benjamin Levy. Yo, yo, yo. He's throwing me his tagline as well. Welcome to the group, man. I really appreciate you. Just jumped on me. Stand by just a sec here. Let me track up again and see if I can find my place again. Yep, I got it. I've got baby cakes. Hey, Ryan, have you heard of a Stockpile app? I think it's like M1 where you can buy a fraction of a stock. What do you think about this? I think it sounds interesting. I want to throw out some advice. I'm really glad you brought this up because this is probably a topic that a lot of new investors out there could probably benefit from my opinion. And I know if Jared Odell is still on the line here, and I know Ernest is probably in here. He doesn't comment very much in this open dialogue. So if he's still in the group, I'd love those guys to offer their comments. But I know Jared really agrees with me on this. Why deviate? Okay, what I mean by that is why not just go with a large brokerage house? Okay, I'm a big advocate of M1 as a platform, but as far as applications like Robinhood, which of course doesn't, and I know your example here is on Stockpile, I will have to check that out. When those things come up in this community, it's really interesting. When I earmark those and I need a little bit further discussion, those usually end up channeling over to the Facebook group. And there's usually a nice article that we can drop in there to be helpful to new investors. My opinion is very simple, and you guys know that I'm set. I mean, I have 2 brokerage accounts. I have 2 retirement accounts, 3 retirement accounts, excuse me. And so I don't have the need to go and make my primary account a Stockpile. Okay. Now, what I would encourage you to look at is if Stockpile offers, I'm going to ask a scary question and I expect a scary answer. They have to offer retirement accounts. They have to. All right. That's something that Robinhood does not offer. And I find that's an extreme deficiency. And I've heard that Robinhood's kind of fallen off the radar as far as I'm concerned. And I know a lot of people got caught up in the hype and they ended up investing in Robinhood. I think used properly, Robinhood can be a good channel. But I think Jared would agree with me on this. Don't listen to some of us seasoned investors that have been around for a while. Why deviate away from a Fidelity, a TD Ameritrade, a Charles Schwab, a Merrill Edge, Bank of America, who I don't get paid compensation to offer my brokerage house to you guys. I just offer it from a client perspective who is very, very happy with the high level of product that they deliver, because on those platforms, you guys are going to get all the data and analytics that you could ever want and then some, free of charge for all the stupid things that we buy in life. How can you not, as a beginning investor, justify starting your account? Hell, start the account. Start it with a login and a password, and don't put one dime in the account. Just use it for the data and analytics, okay? Just use it, and you'll validate some of these things, that some of the best things in life are in fact free, all right? And a lot of those free things that come through those platforms, they've had years and years and years to evolve what it is that works for customers. And I know TD Ameritrade is right there at the top. Fidelity is one of those, all right? Now, if you guys have opinions to offer with regard to your experience with these brokerages, I encourage you to offer those to the group. So the new investors who are always asking me, that's probably one of my top 5 questions. What brokerage house should I go with? That's one of my top 5 questions. Okay. And that's why I tend to evolve my top 5, top 6 list to really always keep the upper echelon in mind when I'm recommending those. Okay. Because if you were just to say, you know what, Ryan talked about TD Ameritrade, I hear him talking about that more often than not, I'm just going to go with that. I don't offer this information with the fear that you're going to take it and you're going to deploy it. You're going to use it. All right. This is a 2-way road on the Independent Investor channel. All right. I left comments some 2 years ago on some of the other bigger channels, and I didn't even get acknowledged on those channels. And I thought, well, okay, maybe they're too good for me, I guess. So I started my own channel. All right. And herein lies some of the motivation that I put forward every single Friday and coming on and engaging with my group, because I think there is a sense of appreciation from the group. in acknowledging how important that two-way line of dialogue is with the creator who's offering his opinion through YouTube. All right. So I hope that answers that question. That's very, very important. I will check that app out. I know some folks are going to find some articles and they're going to drop that in the Facebook group. I've got Doug Whitaker right below. So Ryan, I did a lot of research on a stock called Box. Yeah, it's awesome. They're out of San Francisco, bought 100 shares at 23 for a long-term hold. Is it the Box that we're talking about? I think talking about the same stock, and I haven't done that level of research, but that stock has run up quite significantly. I'd like to know if you bought those shares here recently, or if you've held them since 23. But that is really awesome for you guys that are seeing this post from Doug Whitaker. Doug does a lot of research, and probably like me is a stock dork who just likes this as a project. And a lot of the root of this channel is acknowledging that it's okay to talk about money. All right, it is. It's okay. It's not a faux pas topic that I shy away from. All right, I actually look to engage in this topic, but because I feel like there's so many people out there who need to engage more and get those questions out there in the open. And there's a lot of capable people who can offer that, but you guys will benefit from some of these stock picks thrown in the group here. Doug's one of those guys that likes to throw those in there. Used to be young, laugh out loud. Yeah, no kidding. I just turned 41 last week, so that's where I'm at. But I still feel good, man. I'm we're evolving in life, and I'm not exempt from learning. And I was just talking to one of my community members today with regard to how insistent I am on some of the intangible payments that I receive through this channel. All right. Compensation doesn't always have to be monetary. It doesn't always have to be me coming on here with one sole purpose of doing daily uploads and pushing out a bunch of garbage so I can flood the YouTube channels with a bunch of crap that doesn't mean anything to anybody. All right. Part of my insistent compensation is that people understand what it is that I'm putting down as far as taking the information and actually making it usable for themselves in their own personal life. All right. And that they've looked at it and done it not because I said to, because they've looked at it and they've validated that program for themselves. Very, very important. All right. If I get you sold on investing and you just invest because I tell you to, you will falter. All right. You will fail in the stock market. This has to resonate and make sense to you. So do not invest until you are 100% sure that you want to go from a non-investor to an investor. All right. I appreciate that question. I've got Officer Towers on the line here, a long-standing supporter. I'd love to meet some of these guys someday, man. Some of these guys and gals that come in the community, you guys just seem like awesome people. And part of my motivation is to offer this information to real people, okay? Hardworking people who are looking to take one extra step in getting ahead in life. So it's awesome to see Officer Towers in the house here. Hey, Ryan, you take a position in some silver down here while it's this low. No kidding. I hope you guys are hearing this. Because everybody's talking about recession and et cetera in the stock markets and a lot of overvaluement. You want to talk about silver right now? If you want to talk about a time to add some silver to your portfolio, and I was hit with this question this week, what denominations of silver do you buy? I like the monster box that's offered through Provident. And a lot of you guys are going to be like, well, who has $10,000 to invest in a monster box? If you don't, all right, go check out Provident Metals and Kitco. I do prefer Provident Metals, okay? It's Providant, I believe. Let me check that spelling for you guys. Stand by just a second. Provident, Metals. Please Google it, check it out, because that's going to channel you into the silver recommendation made by my good friend Officer Towers. That's probably the best investment recommendation you can find. Owning precious metal takes some level of responsibility for safeguarding those, and then to understand what levels of denominations you want. I really like the Liberty halves, the Eagles, right? That's the most really the most recognizable form of currency all the way around the world. And you can get those individually. You can buy them in sets of 5, 10, 20, etc., whatever it is that you can afford. And if you can't afford $10,000 to go buy a monster box, start adding some silver slowly to your portfolio each and every month. All right. If you want to take your throttle off the stock market a little bit, start to channel a little bit of those dollars toward adding some silver accumulation to your portfolio. All right. Very, very awesome that you mentioned that. I didn't even have that on my list tonight. That really should have made my list of offering some of the hottest buys right now for the potential for appreciation. All right. I have not bought any silver just yet. But I tell you what, right now is a buy. I think it's below $15 an ounce, if I'm not mistaken. Is that correct on that? Last time I saw it, I think in the high 14s. I couldn't believe my eyes. I don't know what's going on, but yeah, you want to buy now when nobody else is buying. So just let's see. I got K2 on the line here. What do you think about utilities, particularly Pinnacle West Capital? So I will offer how I get my utilities exposure. I do own the only single stock that I own right now is Dominion Energy. It's a great company, but I also own the VPU, which is the Vanguard Utility Spider ETF that basically invests in all of those companies. I'm fairly certain Pinnacle West Capital is one of them. I would have to double check that for you. But I actually wanted exposure to all of those: Duke Energy, Dominion Energy, a bunch of other ones as well that I wanted exposure to. And I thought there was probably no better way than to do so through the ETF. That's the way I get my 3% exposure to utilities. I believe I'm just a little overweight right now at 3.7% in utilities. That's it. It's a boring sector to invest in. However, very necessary. It will pay you a healthy dividend. It will rescue you when every other sector is faltering, and that just adds a little bit more diversified exposure to your portfolio. All right. Some of those really unloved sectors that don't get talked about ever. I mean, when was the last time you had a YouTuber talk about the company Prax Air? All right. I talk about it all the time. I just bought 10 shares of it this week, relatively small position, but I wanted some materials exposure, and Prax Air, I feel like, is one of those best of breed companies. All right. Nice dividend payer. And I wanted it in my portfolio to add some materials exposure, and that's what I went with, was Prax Air. But I don't know about PNW. Just another research project here for the community to dive into. GE is picking up steam. I've got Hector Mendoza offering General Electric. I would say it's about time. I have seen a little bit of life in the stock. Certainly formed a fairly long-standing base here in the mid 12s, low 13s. I'd love to see GE. That would be, one of those unexpected moves in the stock market. I'm still holding. I have 150 shares in General Electric. Not losing sleep over it. No big deal, right? I control my fate with GE. It doesn't happen any other way than I control my money. I entered into GE around 18. I've been hovering down here at about 12. I just recognized that somebody gave me a large tip of $25. Wow, I'm amazed. Thank you very much. I really appreciate that, guys. That is awesome. You guys know that I do not seek out monetary compensation on this. I do this to fight the man. Okay, I freaking do this channel to fight the man. All right, there's way too much misconception in the financial world. All right, that will have you believe that you cannot succeed in the stock market. All right, they will have you believe that stock ownership is somehow something that's scary, that somehow individual investors cannot do, and that it is only for the elite institutional investors in this country. That is not true. All right. That is why we come on here, to have a common voice and to voice our common displeasure with the system that will have you believe that you cannot succeed in stocks. All right. And I am a living, breathing example of somebody that works hard in this country, that is making myself wealthy the self-directed manner that I work. Okay, it is absolutely possible. It is absolutely scalable. Okay, there's no special requirement that you have to have. You do not have to build a stock market course from me to succeed in this program. Go back and watch the catalog of videos that I've offered. I'm going on almost 200 videos in my catalog that I've offered to YouTube to anybody out there who wants to get the information and put it to work for themselves. That is the very essence of the payment that I receive through the channel. But thank you very much. That really, really helps compensate my time. I'm humbled by the gesture. Thank you very much. I really appreciate it. Very, very cool. I appreciate it. Let's scan through some of these questions here. I've got Mario Saros. Hi, Ryan. What's your pick between Procter and Gamble and Unilever? I think they're both fantastic. There's one additional as well to add to that, and that is Kimberly-Clark as well. We're talking about the best of breed here, Marios. That's a really good question. I've owned Procter & Gamble for years. I am in a trimmed position in Procter & Gamble here in the low 80s, but it is one of those stocks that I throw out there as one of those picks that you could buy forever and not lose sleep over, man. You know what I'm saying? I mean, do you want to buy Procter & Gamble or Tesla? All right. Two different schools of thought on that, and you guys know what my answer is, all right? But you've got folks with different perspectives out there throwing out a bunch of jargon to make you believe that some of those value investments will never pay off in the long term. I've talked to some of these older guys with some of these sizable positions later on in life, and they're like, Procter & Gamble, that's the easiest money I've ever made. I mean, I've been invested in it for 30 or 40 years. You know what I'm saying? So does it matter right now that it's at $80 and it's hovered around the $80, $90, went all the way down to 60 a couple of years ago? Does it even matter what it does within a couple of years? And that's that short-term validation that you guys need to get out of your head as being necessary in the stock market, because it's just not necessary. All right? Buy these big, incredible blue chip companies. Become an investor. All right? Control the number of shares that you buy in each of these good cornerstone positions and allocate them correctly. That's the magic sauce, all right? When we're looking at the sausage making process of building a portfolio, I want to show you guys this. This is really, really cool. But this in essence is what sausage making looks like, all right? That is what sausage making looks like. And I've done videos on this. When you get a pad and a pencil and start jotting down some information, don't just think about, hey, becoming an investor will becoming a good idea. If you've got an idea to put an apple in a portfolio, put pen to paper, all right, and write down AAPL and the number of shares you're proposing times the stock price and show what dollar amount will that take to get vested in that particular position. It's amazing how that right there can be the bridge of becoming an idea to reality, all right? And there's so many people out there that cannot have the imagination to take something from a good idea to a sound fundamental plan in that you execute on and make reality, all right? So very, very cool. Let me cruise up here and make sure that I got some of this. Yeah, okay, here we go. Royal Dutch Shell A or B. I'll tell a little story about this. Larry Massa's offering. I own a big position in Royal Dutch Shell Class A. I actually think it's probably a better buy here than Chevron or Exxon. I just did a portfolio makeup today where that was the only oil stock that I recommended actually in that portfolio. But I will offer this advice to you guys, right, wrong, or indifferent. I was sold Class C shares of a particular mutual fund, all right? And I was done so, so the financial planner could make a higher kickback as opposed to selling me the Class A shares, that had historically performed better, had a higher Morningstar rating on the fund, all right? Was in my financial best interest to sell me the Class A shares, but instead turned out and sold me the Class C shares, all right? Now, my second financial advisor that I had in my life, I'm still friends with, and I'm actually friends with the third financial advisor I ever had in my life as well. I don't mean to impugn their work as people. I disagree wholeheartedly with the whole financial planning premise as a whole. Okay, I hate it, to be honest with you. I think it does more damage to people than good. It's my opinion, and a lot of my opinion is fact based. But when I was sold those Class C shares, all right, the follow-on advisor actually gave me the advice that when you have the opportunity to buy a Class A share, you do so because it comes with the voting rights in most cases. Okay, so for example, Google, GOOGL and GOOG, right? GOOG was the pre-split shares that they offered to shareholders without the voting right. Okay, I always typically just advise to go with the Class A shares and not worry about the different denominations. And when you're talking about sitting with a financial planner and they have an unknowing client there, I was a victim of this. And if I'm the victim of something, I'm not a stupid guy, but at the time I was naive. Okay. And I'm not the only one. You're way more naive when you start to invest. And that is where you need to have a financial planner who would sit you down and have your best financial interest in mind instead of their own agenda. I can tell you guys that is not how the industry is formulated. That is not how they can put a commercial on TV every single second of every single day, because let me tell you, you guys are the ones paying for that, all right? Not us individual investors, right? Because we keep all of our profit. We don't share it to provide oak desks and fake plants in offices that are well planted so they can hand out candy to their clients and then rip them off behind the scenes, okay? But that's a cool question. I always offer this rule of thumb and to always go with Class A shares when you have the choice, okay? Hopefully that answers your question, so thank you for that. All right. See if I can get to a few more of these questions. I'm probably not going to go for 2 hours tonight. I'm going to try to keep it a little bit under control tonight. That way I can timestamp this video and get it up for anybody that missed this. Been really just an awesome discussion so far. But I'll go as long as my voice will allow me to go. As you guys can tell, I'm pretty fired up tonight. Offering help to you guys and engagement. I really appreciate it. Alpha Path, I've got hello. My dad is going to make me a stock account to invest in, and I can use some tips. My best advice to you, Alpha Path, is find your way to my Facebook group. You can engage with me directly using a lot of different channels. I will say that I'm fairly quick in responding to email responses. I am a little bit quicker on the Facebook group. However, I do defer to a lot of my experts in the group as well that I've deemed that offer credible advice to new investors. You're here with me now, so fire away at your question. I will tell you this, stick with the channel, all right? I hate to always sit there and tell everybody that I don't do this for money, but I don't, all right? I do this because if I was sitting in your shoes, all right, and I want you to engage your dad in this process, because I don't think we have enough of this around the world in teaching financial literacy young in life. All right, the majority of the lessons that I have received over evolving in my life have been trial and error and falling on my face so many times and making mistakes. But here I am, right? Managing a portfolio well over $300,000, all right? No debt, all right? I own everything I have. Debt to income ratio is 0. Average in this country that's respectable is said to be 20%. I completely disagree with that. It is absolutely possible. Stick with the channel. Join the Facebook group. Ask me specifics. No question is a dumb question. Some of the most principled and sincere questions are some of the best questions that you could ever ask. So do not hesitate to throw those questions at me. I will do the best to answer them. And I also encourage you to read the comments of some of the other folks that are part of the group as well, as I hold their opinion in very, very high regard, as I would expect you to do the same. Congratulations, you found your way to the channel. I will not apologize for the message that we put out, because this stuff works. All right. So thank you so much. Thanks. Send as many as I can. Refer to your group. Nyla, thank you. That's really the strength. I put the most value in you guys talking to your network of people. You need to like them. They need to be interested in stocks, business, investing, building net worth for themselves. I meet a lot of people that just don't care. They just don't care. And they may be super nice people, and they can be friends with me. That's fine. But if you want to come in here and learn something and build net worth, you want to build a portfolio, I'm here to help. As long as people have a sincere approach and want to learn and evolve with me, we can all learn and evolve this community together. And I'm in debt to you for that. I think the strength of the referral is really what I ask in form of payment for offering my opinion and myself up as often as I do to offer this helpful information, because a lot of people understand and have understand as they've evolved with me over the last couple of years. This is all stuff that I do. I do it daily. I did it all day today. Okay. I love the stock market. I love financing, but I also love to teach people as well. It wouldn't resonate as much with me unless I could share my message with multiple people. And YouTube allows me to do just that. All right. Happy Friday, everybody. Hector Mendoza, thank you very much. As far as M1 Finance, instead of auto investing once a week, say 90 every Monday, what do you think about scheduling $18 to auto invest Monday through Friday for quicker dollar cost averaging? Yeah, I think you could do that. I do it weekly, which is a pretty frequent schedule opposed to traditional dollar cost averaging every month. I like the idea. I think over time it may potentially average out close to the same, as the longer you go in collecting those data points along a graph, you're probably going to find that you're not making a whole lot of difference. I do think there's a difference between dollar cost averaging and what I like to do in strategic buying as well, is to try to earmark and pick opportunity in stocks that I feel like are recessed. So dollar cost averaging or not, I do like to strategic buy stock, and that I did do some of that today as well. I did enter about 100 shares of Cisco this week. I bought some other stock this week as well that I will share with you as they come to my mind, but I don't mind sharing those open moves with you. You guys know that I'm having a hard opportunity finding time to get some of the normal videos up, but you guys will benefit in time from me being visible. The next one on the radar is my portfolio. There's been some changes to the portfolio. I think the community will benefit. I don't mind sharing that with the group because I think transparency is great. And I have no reason to not share it. I don't care. I don't care. It's just a portfolio. It's really not that big of a deal, but you can kind of see how I deploy and build my portfolio out. And I do want to show you guys some of those changes that I've made, especially along the lines of the fixed equities as well. Rookie Gamer says thank you, and you are welcome. I'm just over here like, what is he talking about? Let's see. GameStop stocks usually go up when popular games such as Bo 4 get released. Yeah, I mean, look, that's an interesting thing, but I don't know if you guys caught my comment about investing on the next best thing, okay? Or a game company comes out with a hot stock, or a pharmaceutical company comes out with a drug that just got approved, right? I tend to stray away from that type of headline investing, okay? And I don't mean to minimize it in that way, but I would rather look and discuss companies like a Johnson & Johnson that's been around for 100 years. That makes more sense to me than anything. And I've done nothing over my life than to validate that strategy. And if you look at some of the mega cap holdings, look at some of the ETFs that are offered through Vanguard, for example. Doesn't have to be through Vanguard, but go in there and tell me what their top 10 holdings are in some of those large cap values companies. Look at what the top 10s are: Apple, Microsoft, Visa, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson, Procter & Gamble, Pfizer, Merck. They're all the stocks that we talk about, right? There's a reason for that. All right. So really, really important to kind of take that philosophy and invest how you will. Each investor is different. I just offer my perspective, right, wrong, or indifferent. I tend to believe that you're never really as right as you think you are in the stock market. So I don't have a lot of sympathy for arrogance, and there's a lot of it in this game. They think that because they can invest and make money in the stock market, that somehow it makes them a better person. It doesn't. It doesn't. It doesn't make you a stock god. It doesn't. All right. Anybody can take money and put it into a stock and make money. All right. Anybody can put money into a stock and lose money as well. It doesn't make you a better or a worse person. Okay. It doesn't. It's completely separate from any of that. All right. That's one of those principles that I love you guys to understand about how I approach the stock market. It really has nothing to do with what I do or how I conduct my business with people or my interactions with people or how I teach, okay? The size of my portfolio does not dictate my level of credibility when I'm offering information to people that works. It just works, period. All right? What's he talking about in blue chip stocks? Rookie Gamer, what he's talking about is blue chip stocks. Yeah, listen, it's one of those things to where you can choose to consume the content that you choose to consume. And a lot of people, I think, since they have a vested interest in certain YouTube channels out there, let's say they've entered into a stock group for $50 or $100 a month, which I came out with a video, Stop Wasting Your Effing Money. That's exactly what that was about, because anybody can turn the Independent Investor channel off at any time. I've said from the very beginning that this channel can cease to exist, and I would go on with my life and not miss a step. I wouldn't, okay? Because I think a lot of people, they want to become part of a community and they want to pay to become part of an exclusive stock group. But when they actually stop to look at the results that are produced from those stock groups and stock courses, they will actually find out that they're not getting ahead at all. As a matter of fact, they've started themselves in a vacuum, all right? Now, I'm not charging you anything to offer, let's say, the 25 stock picks that I rattled off rapid fire to you guys during this just over an hour of dialogue. So not everybody is going to find value in that, all right? I offer my content to anybody who wishes to consume it. And I fully understand that the larger the channel gets, the more haters out there are going to be like, you have no idea what you're talking about. Blue chip investing does not work, when in fact it's the tried and true proven method of investing in the stock market over the course of the years. And it becomes more and more credible when the stock market does something other than go down, okay? And those are some of the people that have been investing in the stock market for more than 10 years. If you have less than 10 years in the stock market, you do not have the experience that I speak about, all right? You don't. Because all you've experienced is 10 years of continued appreciation in the stock market. You have not lived through a downturn or any sizable correction whatsoever. And I'm here to tell you it does happen in the stock market, all right? Try to get down here to the ball. Let's see. Alpha, it'd be a good idea to view all the videos from the beginning. Yeah, if you resonate with the message, okay? I mean, I can wrap up and save you the time, and I'd love for you to go back and watch my chronicle of videos, absolutely. But I will say this, my message is kind of a three-tier message, all right? The first most important thing you can do is start the right account, and that is the self-directed Roth IRA account. It will provide you two things, all right? It will provide you tax protection, okay? Like any Roth IRA will protect you. The piece that is missed all the time is the wealth preservation piece, all right? Many, many people out there all too often start a Roth IRA and get the tax protection only to subject that account to the fee structure of the financial planners, all right? Most people don't even understand that a self-directed account even exists. If you heard that 30-second rant from me, you don't even have to go back and watch my entire catalog of videos. You can just do yourself a favor, and not sleep Sunday night and wake up extremely excited because your life has just changed on Monday morning and start the process of starting yourself that account. And then you can turn off my message and never watch it again, because you will have been empowered with that information, because a lot of people don't know about it. They don't. All right. So that's kind of my message in a nutshell. And a lot of it is just to share that message, because it's something that I do in way of a testimonial. I can offer what I do. A lot of people can't offer that testimonial because self-directed investing hasn't been around for that long. I've been doing it for 7 years. A lot of people don't even know about it, let alone have the amount of experience that I have. I do contend that I'm one of the first ones that got involved with self-directed investing when Merrill Edge was taken over by Bank of America and started to initially roll out the program. I got a cold call from a guy in Arizona that actually introduced me to self-directed investing, and I was actually turned on by a family member to say, look, this is legit. You need to do it. It's the best thing for you. It's been liberating ever since. So that's kind of my story. Kind of getting to the end here of the questions that are offered in the group. I do want to get to David Mathis, who's very, very devout here. I've got Gronox61 just joined the group. Welcome. I've got Scotty. What are your thoughts on Roku? I think it will be the Microsoft of streaming television. I can tell you, I got Roku for my birthday, and I love it. I think it's awesome. I think it's an awesome product. As opposed to Apple TV, which I took back to the store. I returned it to Best Buy. And I think Roku's awesome. I'm actually considering doing away with my normal subscription and just keeping Roku because I love it. It's actually, I'm spending more time enjoying that content than I am regular television through Fios and Verizon. So I think it's awesome. As a stock, I don't know. You guys do an analysis and throw it in the Facebook group for anybody looking to take a small, aggressive position in Roku. But I think it's a cool company. I think it's even better of a service as far as an investment in a stock. No, I don't know. My portfolio right now is full. It's awesome. I'm loving it right now. Ryan, good evening. My 16-year-old daughter has 2,500. Would you recommend advice putting it into? I've got Norman Adrande on the line here with a very, very good question. I do an investing video for kids, and there's a few options that you can do. The one that is the most creative and kind of requires a little bit of financial mathematical smithing is to get them into a Roth IRA. They can invest in a Roth before they're 18 years old. But they do have to produce some level of earned income up to $4,000. The easier way to do it is to actually continue to save that money for her until she gets to an age where she can contribute to a Roth IRA. Okay, if you didn't want to wait, you could look into the UGMA account, the Uniform Gift to Minors Act, and that is UGMA. All right, and I'd like you to go online and Google that, please, and you'll see it's the Uniform Gift to Minors Act, the Uniform Gift to Transfer Act, UGM or UTMA, Uniform Transfer to Minors Act. Okay, sorry, I'm acronyming you to death. But those are the two acronyms that you'll put into Google, and you'll get the same information that I'm about to tell you now. The UGMA allows you to take that money and really invest it in anything that you want for her. And depending on the state that you live in, whether it be when she reaches 18 years old or 21 years old, which is considered the age of majority, okay, she will be entitled to that money, and that money will be allowed to grow in that account and will transfer to her, all right? The other option that I do for my own children is the 529 plan. It is specific to college savings. There are 4 other protected categories that allow those dollars to grow. I would just recommend that you hear me out in that she is already 16 years old. There's nothing wrong at all with just allowing to fund that to cash, okay, until she gets to a point where you maybe just gift that money to her and give her a nice starting position in a Roth IRA, okay? When she's able to do that, she's making some earned income. Perhaps maybe she goes to college and gets a part-time job. Maybe she gets out and actually has the opportunity to start that Roth IRA early in a career, maybe in conjunction with a 401k, now you're talking about giving her a head start in what I consider to be the very best account on the market to people that nobody knows about, and that is the self-directed Roth IRA account. All right. Please advise her to come onto the Independent Investor channel. I give credible advice to folks in way of how to build that account out, and that is actually the easy part. But pertaining to your question on what account you would look to earmark for her, I would consider the easiest method to continue to save for her that cash. It's never, ever going to hurt to continue to save the cash. It sounds like eventually you're going to gift that to her. So continue to save that cash. Remember, the first funding amount can be $5,500. What a great gift to somebody to start a self-directed account for her to set herself up for the long term to be able to have that 7 figures later on in life. And that's actually what it'll track to be if it's continually funded and taken advantage of over the long term. So Norman, I hope that helps you. Great question. I do put out a video on investing for kids. I do talk about these topics a little bit more in depth. But if I were you, I really wouldn't get in a big hurry with regard to trying to get her an account started right now and trip and fall and end up in the wrong account, okay? I feel like the right account for any young person is going to be that self-directed Roth IRA account. That of which gives you that tax protection, like I said, but it's going to put you into that self-directed category, which results in you opting out of any fee structure that the brokerage house that's offering the self-directed account is going to attach to that account and consume those dollars very, very slowly off the top every year, okay? You're basically opting out of that program, and that is the very best gift you can give your daughter. Thank you so much for that question. If you need any clarity on that, please address the question again or kick me and hit me up in the Facebook group or hit me up with an email directly, and I'll help guide you in that. But I applaud you in your efforts in trying to do that. That is really, really cool. We need more of that around the world. We really do. It's a good idea to start moving investments to cash or government bonds. It depends on how much you have. I think anybody with $10,000 or less probably doesn't need to fuss with trying to time this market. This is a tricky, tricky stock market. And when you are zigging, it's going to zag on you, okay? If you've got, 100,000 plus, certainly that's a time where perhaps maybe you can safeguard some cash. Maybe if you have $100,000 that's invested solely in ETFs, which covers the entire stock market, now that might be a time to take some profit off of the table. I actually think that you could actually take some risk off of the table by taking some of those profits and rolling them into some individual stocks that I feel like are good buys right now, okay? So there is a balance there, all right? If you're overexposed to the stock market via ETF and you have no bond exposure or no cash right now, I would heed my message and look at your portfolio and say, how can I take some risk off the table? How can I safeguard some cash in whatever fashion, right? And get it tucked away for a rainy day, all right? I always advocate for a dual strategy, okay? What can I do to continue to enjoy appreciation in the stock market? And what am I going to do if the stock market ends up correcting it on us? Am I in a position to take advantage of both situations? And that is a question that you have to answer for yourself. I'm the one that just poses the question out there for you guys to answer for yourself. That's the $1 million question. If everybody had the answer to that, that would be great. But unfortunately, it's one of those things that nobody really has the answer on. Okay. Is it a good idea to see? I've got right below it. I learned in 2007 watching Mad Money and reading through Capital One Investing Share Builder at the time tutorials. It's awesome. Get your information wherever you can. Right below Mario Saros, do you buy dividend stocks with a lump sum of money so that you can get at least one stock through reinvestment per year or gradually pour in money to stocks? Thanks. It really depends. I tend to be more aggressive on my picking stocks. I don't tend to finesse my buys. I bought 100 shares of Cisco this week, and that's just what I did, period. I didn't try to finesse the position. I didn't try to pick a magic entry point. I do market orders because when I want to buy a stock, I buy the freaking stock. I don't tend to worry so much. I'm sure you could save a few basis points by doing limit orders and setting your price where you want. I've been very successful on just making strong moves in the stock market. And when I want to buy a stock, I buy the stock. All right. And I don't lose sleep over it. Okay. I don't worry about buying a Google at an inopportune time. I bought 7 shares of Amazon yesterday. Today it went down. Okay. I don't lose sleep over stuff like that. Okay. Because I want re-exposure to Amazon. Okay. That's just what I want. So I buy the stock. I don't worry too much about those little things, but you can strategically buy and set the limit orders to buy when you want. But with dividend investing, okay, what I'm really looking at doing is getting an optimal entry into a particular position. Maybe it's adjusted back for a week. Maybe it's been on kind of a downturn and it's a stock that I really want. The best example I have in my portfolio right now on a dividend play is Kraft Heinz Food. All right. Kraft Heinz Food has been on a downturn like no tomorrow and nobody talks about it. Okay. When nobody's investing in a stock, that might be the time to look at a Kraft Heinz Food here in the high 50s. Buy ratings across the board. It's making money. It's doing great. Very diversified portfolio of their business. And it's traded off of their highs. I think it's come down from $88 a share. It's trading in the high 50s right here. Maybe you take a stab at a Kraft Heinz Food right here. That might be a position that if you wanted to kind of creep into it a little bit, that way if it does continue south a little bit, you can scale into the position or average down as it's referred to. You can do that. But it really just kind of depends on the nature of what you're buying and why you're buying it. And typically dividend investments are ones that I just grab for the long term. And I'm looking to hold those for multiple years at a time, because that's really when the stock is going to start paying you back over time. What do you think about Celgene? Celgene is the premier bio. I'm drawing a blank. It's biopharma. Guys, help me out. It's been a long day. Yeah, Celgene is one of the premiers. I'm not a big biotech investor. I'm really not. I wish I could be. It's just not one of those sectors I don't think I've ever invested in. I'm more of a pure healthcare investor. I do like Medtronic as well in the robotics and surgical robotics territory. I've never bought into it surgical as well, but Celgene it is a stock I do cover. I've never invested in it, but I understand it to be a best of breed in biotech. So I do endorse the move. Again, just one of many examples of how you can win in the stock market, and you can win with Celgene over the long term. I've got David Mathis here. What do you think of Vanguard's new world bond that seems to combine BND with the international version of BND? I was just looking at that today, actually. Might be interesting. They don't have a very long track record, which kind of gets me a little nervous, but it could be good. Fairly safe blend of holdings. I'm actually down even further in my bond portfolio right now. I went up initially, but I thought I had that licked with the charts, but evidently I didn't. I've taken about a 1.5% decline in my bond portfolio in each of the holdings. I'm down 1.5 maximum, and I'm down about a half of about 50 basis points in some of the other ones. So no big deal. Those are long holdings for me. I wanted some bond exposure. Just over 10% right now in my portfolio. I did add a little bit more to it because it came off a little bit, so I added some more to it. So those will sift out over time. So that's what I did, and I'll show you guys all that on my portfolio review. I'm trying to get to the end of these questions. You guys keep hitting me up. I really appreciate the engagement tonight. I've got So True, blue chips are the safest return on your money over time. Yeah, I just think some of the most obvious choices in the stock market are typically right in front of your face. All right. So you've got really young people that are on YouTube that are throwing out information about how easy it is to be a stock investor, and they haven't been a stock investor for more than 10 years. All right. I'm sorry, but you have to gain your credibility with me. All right. And gaining your credibility doesn't mean that because you have an opinion that is less than 10 years old, that you know everything about the stock market and that it's easy. Okay. That is not the approach that I want to give to new investors. All right. And when it really hits the fan, all right, and stocks really start to take a haircut, are you honestly going to take that haircut into a downturn? And then you're looking at stocks like Roku, who are down 50%, and you're like, wow, now would be the time when I'd really like to have some Johnson & Johnson in my portfolio. I'd love to have some Apple Computer, all right, because I can sleep easy. Why didn't I make those investments when I had the chance? You know what I mean? And then you're stuck. You know what I mean? Being a value investor is actually very, very simple, all right? Holding on to stock over the long term is one of the easiest, most difficult things that you can do over the course of being an investor. And that's something that's kind of a learned craft over time. It really, really is. All right. Just join the group on Facebook, Alpha Path. Thank you so much. I look forward to it. I'll hit the approved button for you. I've got Greg Gatsby on the line, man. Great to see you, man. Really a long-term supporter of both my channel, which is very small and very unknown, but definitely a legacy supporter of my friend Ryan Scribner, who I think Greg's been on there for years supporting my good friend and his efforts in offering great information to people, man. You know, you might not hear it all in the first delivery, but we're really looking to try to break down a lot of the misconceptions with finances and really try to reach people who may not understand or think that it's impossible to get started. And they absolutely need to understand that that's not the case, but there's a lot of misdirection out there as well. So be careful with the content that you choose to consume. All right. I've got Ernest. Please don't forget to click the like button on your way out. If you're interested in the Facebook group for this channel, it's called Self-Directed Investor Portfolio Solutions Group. That it is. And Ernest is one of my ambassadors in that group. And I hold him in the highest regard with regard to the information that he offers. It is absolutely premium information that you cannot get anywhere else. Honestly, the information that's passed through the Facebook group is priceless. It really is. And there's very, very few things in this life that you can identify and get that much value out of free. And that's all I'm going to say about that. All right. I've got Greg right below that. What do you think about NiSource after the natural gas explosion in MA? Quick rebound or trouble ahead? Thinking of selling some of my shares and buying Consolidated Edison or Dominion with the money. Greg, I'm a long-term holder of Dominion Energy. That's really the only stock in the utility sector that I do own. Another offering that I did offering, I don't know if you're late to the group, if you've heard me offer my VPU, which is the utilities offering ETF. It's the sector-specific utilities, and it owns kind of everything. Because like you, in the difficulty of finding a specific utilities play that I was happy with, they're always working through issues like that, okay? Dominion's going to take a haircut with this storm that's rolling through. And they've always got some sort of issue going on, whether it be the wildfires in California or Hurricane Florence now rolling through and causing chaos in the Carolinas right as we speak. It's really hard to drill down on gaining the best, really the best, and VPU has come back a bunch. I took it down into a big downturn. I think I was down close to 20% in VPU. So I don't mind offering it to you. I'm still down a little bit in the position, but keep in mind, I don't like to recommend utilities sector allocation beyond 3. I'm a little over 3 right now at 3.7% in my portfolio. But that's all I own in utilities. And I tend to put a little bit more heavy of an emphasis in my portfolio, my specific portfolio in technology, staples, discretionary right now. I'm a little underweight in financials right now. I'm a little underweight in healthcare, excuse me. I think I'm about equal weight in financials right now, but some of those sectors I gravitate a little bit more. Utilities is just one of those boring sectors that's going to pay you no matter what when all the other sectors are kind of going to hell a little bit. But that would be my recommendation. The gas explosion, those things, that they happen. And it's going to affect the stock. So that might be my advice for you in how to get your utilities exposure. That's just what I do. That's right out of my game plan. So hopefully that helps you. I'll do some research on Roku and post it in the Facebook group. I've got Scotty with mobile. I really appreciate that. Very bullish on this stock. Streaming TV seems to be obvious trend that we are heading towards. They are the market leader currently. That's probably the comment of the night right there, guys. And I probably was a little bit overspoken on my being careful with Facebook. I'm a long-term holder in Facebook, okay? It's the best in breed. It's a company that I look at that I actually don't like to not be invested in, okay? I look at those premier companies out there, and when I'm not an investor in Facebook, I feel like I'm missing out. It just makes me feel like the participant that I want to be by owning a piece of Facebook, all right? It's just, that's the way I feel about it. It generates company like a beast, all right? And its multiple is actually getting down to where it's trading at such a forward price to earnings ratio. It's almost trading like some of the high premium value plays in technology and not getting credit for being the high growth play that it is. You know, it's kind of doing that balance between the two, but kind of unjustified in in getting it beat down in its stock as it's adjusted back over $50 a share over the last month or so. It's probably a great entry point. I could care less, really. I'm looking to take that entry into Facebook. I thank you for that, Scotty. If you want to post that Roku review to the Facebook group, there's going to be a lot of people that benefit from that. I'd really appreciate that. I'm going to enjoy that because I do like the product. I've got Alex J. What do you think about investing in business development companies? I don't know much about it. If you have more to offer, certainly throw that out there. Not one of those avenues that I have pursued, as I do feel like there's an infinite amount of avenues that you can pursue in business. You know, this being one of them that I'm pursuing. You know, the Independent Investor Channel is one of my side hustle projects. That's it's a lot of fun. It's a lot of enjoyment for me. I think that it has infinite potential. It's something that it's my niche, and I don't see it going anywhere for me. I believe I could do this for the next 20 years and be somewhere else doing this in a studio somewhere, offering the same credible content to existing community members, as I expect that we'll grow and evolve together, and also always, you know, keeping the churn going where we're consistently bringing new community members to the message, as I believe it is that important for people to really understand. So I've got Cal, Whoop, Lifetime, absolutely. Warren Buffett rule, blue chips all the way. I couldn't agree. Do you think oil and gas stocks are a viable long-term play? I do, and that's why I invested in PXD, which is Pioneer. I wanted the Permian Basin and Bakken regions, I believe, for the shale aspect, as they're a premium player in that. I do, and a lot of people don't understand that you know, oil and gas companies, you know, it all derives from shale, crude oil, you know, all your biofuels, chemicals, you know, all that comes from divisions of crude oil. And it's one of those things that I do feel like it's long-term. It is viable long-term. And it is something that each portfolio really should have a small allocation to energy in whatever form or fashion you choose. I've thrown out some excellent offerings tonight: Chevron, Exxon, Royal Dutch Shell. I throw out Pioneer as well, PXD. That was the new addition to my portfolio specifically this week. I'm not one of these guys that get on YouTube and just start throwing out a bunch of garbage to you guys about, oh, I buy this stock and I buy this stock, and I'm not actually doing it. Okay. When I throw out a stock pick that I'm actually putting in the portfolio, it's legit. Like, I'm actually doing it with real money. Okay. It's not Monopoly. All right. It's real. All right. So thank you for that. I'm going to start to wrap this offering up. I will go in about an hour and 45 minutes tonight. I would like to thank the group and everybody that kicked in here. I'm going to address Keystone Stacker as well. I appreciate you sharing your ideas and inspiration with us. This is a great talk and discussion. That is the point. That's the very validation, and at the very least, it's a payment to me to let you know that you appreciate the message. That really means the world to me. I thank you so much. If I felt that there wasn't any value that was coming across the table, I would stop this in a heartbeat, because I'm not all about wasting my time. And the people who come in and look to converse in a community like this and seek a little bit of support, you know what I mean? Everybody can use a little bit of support in their investing lives, and this is just a small piece of your overall collective health. But the financial piece is an important one, and I find all too often that it's the piece that a lot of people struggle with. All right. And these kind of support groups allow you to throw out your ideas and get different opinions about it. And I think it's a beautiful thing. It's really part of the strength of the channel that I really enjoy. And I think we're producing a lot of value for people. I really do. So, guys, thanks a lot. I've got Doug Whitaker. Have a great weekend. Always a great live chat. Yeah, this was fun tonight. I really enjoyed myself. I hope you guys do. I've got Lee Wynn. Thanks, Ryan. Again, great message as always. Thank you, guys. With that, I'm going to go ahead and sign off. You guys have a great weekend. Thank you so much for your enjoyment tonight and engagement. It's just an hour and a half or so, couple hours of having a little bit of financial peace in your life and getting you to think about evolving your financial health and aptitude going forward. And I think, on a weekly basis, you're probably getting, more information through this channel that you can kind of deploy for real in life. All right. Thank you guys for tuning in, guys. Any of the topics that have been brought up tonight, look for those topics to be brought up over in the Facebook group. And I will catch you guys next week. Thank you so much for tuning in, guys. Have a great weekend.